So you opened your first retirement account. I'm talking like an IRA, a 401k, a 403b, a 457b, and all I want to say is congratulations.
Congratulations.
What's up, everybody? This is your boy Nick, back at you today from Winning Lifestyles, here with a few guest stars, my boy Pico the Chug right here, and I've got Cookie the Shih Tzu sitting behind here on my lap because they just don't want to leave me alone tonight. And Pico, come on, sit down, bud, sit down. Come on, we got a lot to talk about today. So a year ago today, I was sitting in your shoes right now. In fact, I was worse off. You know why? I was sitting there thinking way too much about where to open my IRA, what to put in it, what was I gonna start investing in, and oh man. And what I gotta say is that I guess it kind of worked out because I didn't start investing until March when everything started to drop. But I missed out on so much like dollar cost averaging. I mean, the numbers don't lie. When you go through, you look it up, people who invest consistently every single week, month, year, as long as you're putting in money and not trying to time the market, you will always end up in the green. Okay, I gotta be careful. I can't say always because who knows, maybe that one year is gonna be the year that everything drops, or you know, the worst possible case happens and like our economy just goes down the pooper forever. But what I wanna say is, folks, this video is all about telling you now, where are you gonna put your money in? Because trust me, you don't want to be that person who was like, oh, I opened an IRA because somebody told me to, but you didn't buy anything in it. Ow! So what I want to do today is talk about the most simple way to get ahead of the game and start investing and making gains. Now, I just got to put a disclaimer out there. We at Winning Lifestyles, we're not financial service advisors or anything. We're just doing this for educational purposes, you know, for funsies. And I just want to say, folks, please make sure that you're doing your own due diligence, checking out your research, and please make sure that you reach out to professionals if and when you need them. And please do us a huge favor. If you like our content and you want to see more of Pico the Chug here, please do us a huge favor. Hit the subscribe button, ring that notification bell, and smash the like button. Please, it does wonders for us and helps get the word out there so we can get one step closer to our dream of helping more people build wealth. So what I want to say is, if you're looking for one book, that's right, you only had enough money in your account for one tiny book to get you through investing for your entire life, the book to buy is from J.L. Collins, The Simple Path to Wealth. Like legit, his book was the only book I've bought at full price, or okay, not technically full price, at full price on Amazon for like over 10 bucks in the last 5 years. Like, I'm super cheap. I will try and find that book in like half price books. I will go and look everywhere to get a copy of that thing. But you know what? Couldn't find it and decided it was finally just time to dive in and do it. Totally worth the money. We've got a link down below in the description if you want to check it out. The idea of the entire book is that if you're looking for a one-stop shop so that you don't have to think about all your investments and get solid returns on your money, it's index fund investing. Now, I'm not gonna lie, like Warren Buffett himself said it, when he goes, he's gonna make sure that his family invests using index funds. Why? Because you can't lose if you own everything. Like, think about it like you're going to gamble in Vegas or something. If you're out there, the house always wins, right? Well, you want to be the house, and in order to do that, you've got to own a little bit of everything. And one quick and easy way to do that is with index funds. Thanks to Jack Bogle a long time ago, the guy who founded Vanguard Investments, that's why Vanguard's such a huge thing out there, we now have this beautiful thing called an index fund. Now, I talk about more about it on my blog if you want to check that out. Links in the description. But what I want to say is, folks, you only really need 2 funds, maybe 3, 4 if you want to get really fancy about it, in order to capture essentially every single possible stock out there in the world. So let's go ahead and get started. The first index fund to buy is one that captures the total stock market. That's right, I'm talking about the total stock market index fund. Now, there's a lot of different flavors of this. Whether you're on Vanguard, that's going to be VT-SAX, or if you want to buy the ETF version, that's VTI. Or if you want to buy it through Fidelity, there are 2 different fund versions, right? That's FC Rocks for their new zero fee index funds, and FSKAX which has an incredibly low expense ratio of 0.015. They literally hold more than 3,000 stocks, which essentially encompasses the entire US stock market. And if you're a huge fan of Schwab, that's going to be SWTSX with an expense ratio of 0.03. Oh, I think I forgot to mention that Vanguard's expense ratios, VT-SAX is 0.04, and VTI, the ETF version of that, that's just 0.03. But the idea is you want to own a piece of everything out there. Okay, so this is if you want to hold all of the stocks. This includes the small cap, the mid cap, the large caps. Make sure you look into the prospectus though, because there is some slight differences. If I remember correctly, Vanguard holds a lot more stocks than like Fidelity's and Schwab's total market index. So just dive in a little bit more and remember that this is the US stock market. Now that brings us to index fund number 2. Now we covered all of the US, so now we got to think about the rest of the world, right? I mean, like Samsung, Alibaba, Toyotas, TSM, Tencent, all of these stocks are owned by other companies outside. So how are we going to get a taste of all of those too? FTSE. I kid you not, it's called FTSE 100. That's the index. It's like the Financial Times Stock Exchange 100 index. And these are counting all of the bigger stocks outside in the rest of the world. Now, yes, there are index funds that cover all of these, so you don't have to look up all these stocks and everything. You can just buy in one little pot that covers everything. So if you're like a Vanguard kind of person and you love their funds, that ticker symbol for you is gonna be VFWAX, right? VFWAX, and the expense ratio is 0.11%, which isn't too bad at all. But if you're more into like the ETF version, that's just gonna be VEU with an expense ratio of 0.08%. Now, I know I've been throwing this term ETF out there a lot, and what I wanna say is we'll have another video about it in the future, but if you can't wait, just go down below in the description right now, just pause the video, scroll down, and find the link. I have a short blog post that will cover all of it, the differences between ETFs and index funds for you in less than 3 minutes. Okay, now we're back to the program here. We got to talk about Schwab next, right? If you're a huge Schwab investor, and again, it doesn't matter where you go with your brokerage. We'll do a whole video explaining how we picked our brokerage, which is Fidelity, as you can tell from our Fidelity stock videos. But if you're into Schwab, that index fund for the international market is SWISX, with an expense ratio of 0.06%. Now, of course, I want to mention that all of these index funds are relatively close, but they're not like exactly the same thing. So, you know, just keep that in mind, do your research and see what the holdings are. For instance, the top holding in Vanguard's fund is Alibaba, whereas the top holding in Schwab's fund is Nestle. Which now brings us to Fidelity. Now, if you're using Fidelity as your brokerage, you're gonna see that there's a lot of different international index funds out there that you can choose from, okay? It doesn't matter, just check the prospectus and pick the one that you like the most. And, you know, if you're not sure, then just save yourself the time and energy and go with the one with the lowest expense ratio, as long as it has the big companies that you see in other index funds or are part of the FTSE 100. But that ticker symbol for you for Fidelity is going to be FZILX. And yes, I love this fund because it's part of their new zero fee expense ratio index funds. So that one's great to check out. Now, if you made it this far, we are now into our third and final fund if you're just trying to keep things super simple. This is gonna be your total bond market fund. That's right, you wanna own a bit of bonds the older you get. And how you pick your asset allocation, look it up online. Most people usually say, I'm gonna pick my age and subtract that from 100, and that's how much you're gonna have in stocks, and the rest is just gonna be bonds. So your age is typically the amount of your bonds. I wish I just said that. The idea is, which bonds do I choose? Bonds are typically less risky unless you're like in an economy like we're kind of like now. Basically, whenever stocks go down, bonds get a little bit more strong, and when bonds go down, stocks are a little stronger. So, you know, that's why you want to hedge your bets. Okay, a lot of different people have a lot of different ways of how they choose to allocate their index funds. It's your decision to figure out your risk tolerance and how much farther out you have until retirement. But let's talk about those 3 funds that you should look into. Now, if you're into Vanguard, that is gonna be Vivitelex. Say that 3 times fast. Vivitelex. Okay, ticker symbol is VBTLX. And the expense ratio is 0.05%, which is really great. And it covers the total bond market index. So literally, you're buying all of them. Save yourself some time. Now, if you prefer to go the ETF route, the ticker symbol is way easier. It's just BND. But if you're choosing Schwab, that's just gonna be SWAGX. That's right, ticker symbol SWAGX. That's a pretty boss name, right? And the expense ratio is 0.04%. And if you're going for Fidelity, the total bond market index ticker symbol for that is gonna be FXNAX, which has an expense ratio of 0.025%. So those are like the 3 big funds that you could buy if you wanted to cover like all the stocks out there in the world on top of the bonds. Now, if you wanted to get a bit creative, you could add a 4th or even a 5th index like we talked about before. Some folks really like to look into the real estate index funds, which we'll talk about later in the future. Real estate is by far one of the best ways to invest your money and have a very large return in potentially a short period of time, especially due to appreciation, as long as we're not talking about like the '08 housing market and all that stuff. The other thing you could do is get an extra S&P 500 index on top of your total market index. And the reason for that is so that you can get a lot more exposure to those large cap top 500 companies in the United States to really reap those gains if they're just killing it that year. Sure, you're getting double exposure from your total stock market index fund, but remember, those help you cover the small and mid caps too. So this is just an easy way to invest in all of them. Now again, if you don't have access to these total market index funds, total market bond funds and stuff like that, because it's through your employer's 401k, 403b, 457b, don't stress about it. There are other ways to kind of recreate these funds, which you can find in, once again, J.L. Collins' amazing book. Literally, it was published back in 2016. It's still relevant today. Link down in the description below. He talks to you about how you can kind of Frankenstein different funds together from large cap, mid cap, small cap, and just make your own total market index fund. So there you have it, folks. Those are just some ideas for what you can start buying with your retirement accounts now that you got started. And if you're looking for some motivation on getting into the stock market, this is from just 9 months of passively investing in index funds and some small individual stocks here and there. Thanks again, everybody, for checking out Winning Lifestyles. Do us a huge favor and smash the like button for my man Pico the Chug right here. And we're looking forward to seeing you again in the next video.